Hi, I'm Ross Mayfield, investment strategy analyst at Baird, and we are back for another weekly update with our friends at Strategas. Today, I'm thrilled to be joined by Washington research analyst and managing director Jeannette Lowe to talk all things DC policy. But first, Jeannette, how are you doing today?
Doing well, Ross. How are you?
I'm doing great. Thank you so much for asking. I think it's fortuitous to have you here. You and your team have been pretty vocal about your anticipation of a potential government shutdown starting in October. So to get you in the middle of September and ask the question about where are we in the process and get your latest update on that, I think would be really helpful to folks.
Awesome. So we are thinking that it is likely that we are going to have a government shutdown on October 1st. What we are looking at right now in Washington is that there is a budget fight between the House and the Senate. The House is looking to have spending cuts in place for fiscal year 2024 that are lower than the debt ceiling agreement that was made back in June to cut discretionary or to cap discretionary spending for fiscal year 2024 and fiscal year 2025. While the Senate is actually looking to go higher than those caps and pass even more spending for the current fiscal year. So the two sides are coming at it at different angles. They do not seem to be looking to actually find a negotiation at this point. And we have just a couple more weeks before we have government funding expire at the end of the month on the 30th. And so that is why we're looking at having potential shutdown on the 1st. So there is a way for Congress to avoid this, which is passing a continuing budget resolution. That is a short-term spending measure that would extend current fiscal year spending forward for, let's say, a couple of months while negotiations continue. But the two sides are quibbling about what should actually be included with that short-term package, and that is also creating the risk that we will actually hit a government shutdown. So we would note that government shutdowns in the past have not necessarily been negative for either economic growth or for stocks. They are more about a political hit than an economic hit. But one thing that we are also just kind of watching is how long does it take for this government shutdown to be resolved, and what are the implications of that going forward? If we look back to the 2013 government shutdown, that one lasted about 2 weeks. And what we had is when the government finally did reopen, that legislation ultimately led to higher spending levels. We think something similar would happen this time around as well, that once the government actually has to be reopened with a piece of legislation, it would be more likely that it would result in higher spending levels along the lines of what the Senate has been working to pass rather than the House. And that could actually lead us to having more fiscal spending than might have been anticipated by the cause of the government shutdown. But this ultimately should be resolved at some point over the fall, but it just could create some at least headline turmoil over the next couple of weeks as this deadline comes to pass.
So you mentioned that in the past, or the typical shutdown hasn't been a big mover of GDP or the stock market. You know, one thing that I think would be going forward is if the U.S. consumer were to falter. The U.S. consumer has been an absolute economic workhorse over the past 18 months, keeping the economy afloat through some difficult times. And you all recently put out a note talking about some headwinds that the consumer is facing now that maybe they weren't over the past 12 to 18 months. And I wondered if you could detail that for us here today.
Right. So we are seeing three policy headwinds for the U.S. consumer. First is that there actually from COVID, there are still these employee retention tax credits that have been continued to be paid out over the past year. The IRS is now slowing down that process. So we had about 150 billion paid out over the past 12 months. And that is starting to slow, particularly as the IRS is looking for any areas of potential fraud and kind of cracking down on people taking the deduction that they should not be. So that is one piece, because that has really been helping small businesses to have a little bit more of an economic driver. Second thing is that we have student loan repayments restarting October 1st. So interest actually started to accrue at the beginning of this month, and we actually saw significant payments to the Department of Education, probably because some people are trying to use their savings and pay down their principal ahead of that interest actually accruing. But the payments will restart on October 1st, and we do anticipate that that's about a $390 payment on average per month that will now be hitting the consumer, where they won't be using it on discretionary spending. Now, there are some things that could play into that. You know, there has been some student loan forgiveness that the administration has done, and eventually the new income-driven repayment plan will be in place. which will lower people's costs for these student loan repayments. But in the near term, we do think that that will have an impact on the US consumer. And then the third piece is just higher oil prices. We saw the Saudi Arabia wanting to extend its production cuts again. And we have been continuing to see higher oil prices over the past couple of weeks. And that will continue to play into what's impacting the US consumer and their discretionary income going forward.
Right, and all at the same time that the excess savings from the early COVID stimulus is being wound down and is kind of on its last leg. So a lot of headwinds for the consumer, and it'll be important for the direction of the U.S. economy to see if they can keep their discretionary spending going in face of those headwinds. But for the time being, we appreciate the insight, and we'll get a check-in later down the road. But Jeannette, as always, thank you so much for the time today.
Thank you. I appreciate it.